G'day there. Welcome to the closing bell. I'm recording this a day early on the Thursday, 8th of June. So I've missed a few days trading that you will have seen. But I just want to point out why I think the NASDAQ in particular is at risk of a bit of a sell-off from this area. So I just wanted to point that out to you, and also our market in general. The ASX is just resting on pretty major support. The financials looking a bit of a worry. So just wanted to sort of have a quick look at the setup out there, really so you can get a sense that there's no need to be rushing in to be buying stocks at this very moment, I don't think, as things are still really up in the air, I think, out there. So looking at the NASDAQ just quickly, this is the post-crash rally that we saw, interest rates going to zero, and these long duration assets, the tech stocks, really flying higher. Then things have turned, inflation took over, interest rates went higher by a rate of knots from zero to their current level, and the NASDAQ got hammered. But the funny thing that's happening at the moment is the NASDAQ has been rallying strongly on this AI story, but interest rates are rising again. So the NASDAQ's going in the opposite direction from the direction you think it should be going in based on those interest rates. So at what point, I guess, will the NASDAQ wake up and say, well, that it's either time to just cool off a bit or possibly reverse? And I think, a target back towards that point of control around 12,000 is a possibility going forward. And look, who knows from there, that's a possibility too. But just wanted to point out that when you do see these really major waves like this, the failure back to the point of control, I'm always wary when you then see that rally back to that sell zone area of the wave. A reversal from there is often a precursor to a move back to that point of control. So it really is a little bit overheated, I think, and the fact that the interest rates really are ratcheting higher again, and the NASDAQ has been rallying regardless, I think that means that it's just a little bit overbought here, and it certainly is in that area where I get very suspicious that things can turn back down quite rapidly. We haven't got a weekly sell pivot, do we? On that weekly, it's still very strong. So there's your weekly trends, based on the moving averages, and it's still, very hot. So, this could still take time to play out, just to fool everyone before it's ready to fall. So that's why I'm just giving you this sort of area as a zone where you've got to be wary and not chasing it higher. But any point from now is a time where it can actually surprise to the downside. And I guess a level to keep an eye on is that old high from last year. Failure below there, it's around 13,700 in the NASDAQ. Failure below there, and watch out. The heat can come out of it pretty quickly. So just wanted to quickly point that out, that I think the NASDAQ is a bit overbought and at risk. And I've been chatting about the weakness in the ASX and how the setup is. It's quite an interesting setup. I'm wary that the momentum can turn down sharply quite soon. But look, it's just such a difficult market to be calling because it's been months and months of nothing. But what I'm thinking about is this old high prior to the COVID crash in the ASX. And look, it's been lots and lots of work up here, hasn't it, for the last few years? A feeling of a bit of a topping formation going on, lots of distribution, really. It's been struggling to rally. And there has been support, though, and that's why, it's just been dead. This is a couple of years of trading going on here. But just wary because of the monthly sell pivot last month, giving you the sign that it is rolling over from a major resistance point. And I'm sort of wary what happens as it fails. You can see it's sort of been resting above that 2020 high, holding on to it. So the failure down through there can see that momentum turning back down. And obviously, last year's low is a really important point to hold above, because below there, you're going to see real capitulation going on. So this is still a potential outcome that you have to be aware of. I've been impressed with how well our market has held up. There's no doubt about that. But just because it's holding in there well doesn't mean it's taking off, does it? It's certainly not that impressive. And if I'm looking at that wave down, I've shown you this before, the sell zone of that wave down last year is, up around this area. So I'm always wary of, the first leg down, rally up into the sell zone, sell pivot, next leg down could be coming. So that's sort of how it's looking. And if I look at the daily, the ASX really resting on that 200-day moving average. Does it provide support as it has in the past here, or are we on the edge of the break and real failure? So it's always a tricky one. I certainly never try to trade it, but you've got to be aware that if it does, it sort of provides support for so long, but then it can break. And when it breaks, it can break very quickly. So that's where it is. It's been trying to hold in there, and it's going nowhere fast. But when I'm looking at it from that bearish point of view, the fact that it hasn't taken out that old high yet, so it's still looking pretty bearish from that point of view. And if you're looking at that wave down over the last few months, I'm sure you can see by now, hopefully, there's your sell zone. So we've had that initial wave down, the wave up into the sell zone, the selling pressure's there. And is it going to break that next major support? And yeah, it's a real line in the sand, that old, those lows that it bounced off a few times at the start of this year, below that 6,900, 6,800 area is pretty dangerous for that ASX. And I just wanted to point out that the financials aren't looking that hot. So this is the financials index for the Australian market. We've had the surprise rate rise last week, inverted yield curve, never good for banks. Property market, arrears coming, those fixed loans rolling off into floating, what happens towards the end of the year, that's all coming. And from a technical point of view, don't love the look of the financials here. Here's the pre-crash, COVID crash high. And you'll see that we've had a nice rally, but this is setting itself up as, the start of that waves down. And we've seen the sell-off up into the sell zone, another sell-off up into the sell zone. And a few months ago, some of you may remember, I sent out a, beware of the banks closing bell, saying that I didn't like the look of them. That was quite a while ago. Here's your monthly sell pivot, attempted rallies. And now here we are busting below the low of that monthly sell pivot. So the overall structure here, which has taken a long time to take shape, there's a chance it could accelerate. This is where I'm saying, what could make us break through the 200-day moving average in the ASX? Well, the financials doing this would certainly do it. And the usual path of things. You usually get these two big waves up into the sell zone, and the third wave is the one you got to watch out for, which could be the big one to the downside. So that setup in the financials not looking good right now. And what happens below that low, that's not looking too good. And below that low is certainly getting that feeling of things rolling back over for those financials. And if we have a look at one in particular, Bank of Queensland, looking very sick indeed. This is BOQ going back all the way back to 1990. That hasn't been such a great investment, has it? Back at levels where it was at in 2001. That's 20 years. You could have been holding this stock for no capital growth. And the feeling of it is that, it's been bouncing out of this area over and over, but the selling pressure is returning. So what I'm worried about, is there bad news in the wings on this? Is their arrears getting worse? Have they been taking on high-risk loans to get market share off the majors? Are they the ones taking on the higher credit risk? Is this where the pressure is going to be shown as rates continue to ratchet higher, mortgages start to go into arrears? Boy, are we looking at Bank of Queensland doing that, breaking below those lows and really dumping. It's certainly looking that way to me right now. I certainly wouldn't be buying that the way it's looking at this moment. So that's really my main warning today, is there are a few things out there saying that the rising rates is causing some creaks, especially in our financials. Our market resting on pretty important levels. We've been going nowhere for a long time, and when the volatility is very low for a long time, often the volatility is very high once it finally breaks out of the range. So for me at the moment, wary of what's coming, but I am looking at uranium. That'll be my finish for the people who have bothered to listen this far. Start doing your work on uranium, looking pretty interesting. All right, cheers. That's enough. I'll come back with more next week.